very, very low and almost zero, and China used to be exporting a lot of coal on a very regular basis. But in 2009, the third big shock for the market was that China ended up importing 120 million tons of coal. So this was a big swing and added a lot of pressure both on the demand side by having this additional cargo coming in, plus having a big impact on the ton-mile equation. The fourth factor, which was unexpected, was congestion. Obviously, because of the demand side expansion from China, a lot of ships were trying to get into the same ports to load and or discharge iron ore or coal or steel, and this resulted in a lot of congestion building up in these ports. If you look at the congestion figures on an average between 2003 and 2008, they average between a minimum of 2% and a maximum of 7%. So last year, when demand was supposed to be weak and congestion was supposed to drop down to zero, in fact, congestion was pretty strong and absorbed approximately 5% of global supply of dry bulk ships. The fifth shock is in the form of underutilization. Because of a lack of trade finance, or because economies had slowed down in different parts of the world, or were expanding in different parts of the world at different speeds, the normal trade flows which were there were disrupted, and as a result, ships spent a lot of time in an empty condition sailing towards their loading destinations. Now, this puts a lot of pressure on the supply side and actually removes supply from the market by underutilizing the existing supply. And the final factor was slippage. If you look at 2009, we were expecting almost 12% of new ships to arrive. In fact, almost 40% of that did not turn up. And the reasons for that were A, the markets were poor, B, people had over-ordered ships during the bull run, C, these were mainly speculative orders, and therefore there were no contracts against them, and people did not want those ships anymore. And the global financial crisis holding back money from completing these contracts. So these were the factors that led to this extraordinary amount of slippage taking place. Now, the data for slippage on deadweight ton terms is 41%, as I've shown you here. But in number of ships, it is actually 47%, which tells you that the slippage in the larger sizes is much smaller than the slippage in the smaller sizes. So just please keep this in mind. Since China is such an important market, I thought I'd just highlight a few facts for you. If you look at the iron ore imports, it has reached 628 million tons for 2009 and likely to reach 675 million tons for 2010. So the growth is not that large, is not expected to be that large for 2010. On coal imports, China used to, has never really imported coal, but like I said, it's now becoming a very large player in the coal market. The expected figure for 2010 is about 155 million tons. Now, you must keep this in mind against the production and consumption of coal in China. Total coal produced and consumed in China is about 3.3 billion tons per annum. So 120 or 150 million tons of coal imports is actually just a small drop in the ocean as far as coal consumption and production in China is concerned. So if something goes wrong with the coal mining system in China and they are forced to import coal, then this figure can go up quite rapidly. In terms of steel production, we hit almost 577 million tons of steel produced in China during 2009. 566 million tons in 2009, and for 2010 they're expecting it to reach somewhere between 575 and 577 million tons. So again, China is an extremely important player for the dry bulk market, and therefore as analysts you should all understand that there is a rather large concentration risk that we are relying on one country to support the entire market. If we look at a summary of the fundamental demand drivers, then we can see that it is the population growth. We can see that wealth has increased dramatically over the last 10 years and will continue to do so, and the percolation of that in the society is also increasing. As a result, eating habits have changed. More and more people are switching from a vegetarian diet to a non-vegetarian diet, and this puts a lot of pressure on grain consumption. Urbanization is growing. I can give you one statistic which is about five years old, which shows that in the city center of Stockholm, 80% of all apartments are single occupancy apartments. Now, generally what happens in the Scandinavian countries is replicated in the rest of society at large. So you must expect urbanization in most countries to keep increasing quite dramatically, and the size of each basic unit to keep dropping down to this number that was seen in Stockholm. Infrastructure development is continuing, and we also see that in the developed world, they are finding that their infrastructure is become old and quite in need of a refurbishment. Besides that, there has been, as you know, during 2009, a very large stimulus plan and very large deficits in more or less every government in every country of the world trying to stimulate demand. So basically, these are the key drivers that have been pushing up the markets. Coming to the supply side. If you look at the supply side, as of the beginning of this year, there is about 479 million deadweight tons of ships in the world. And you can see that if you look at the small handysize and the handymax sector, we are roughly about 20% of the global market share. So it is not an insignificant portion of world trade which is carried on our size and type of ships. If you look specifically at the small handysize sector, you can see that roughly 14% by numbers, new ships are on order up to the end of 2013. That is in the next 4 years' time. Yet, if you were to look at the existing demographics, you would see that roughly half the fleet is already more than 27 years of age in the same time period. We have seen that during the boom years of the last, between 2003 and 2008, that the scrapping age has been pushed back to around 30 years of average age. But even assuming that going forward, and we don't think that this is practical anymore, we think that the scrapping age will come down closer to 25 and maybe even younger, rather than the 30 that has been achieved in the last few years because of the freight market conditions. But even if we assume 30 years as the average scrapping age, in the next 4 years' time, more or less half the world fleet in our sector will disappear. Looking at the new orders, and there is a lot of them, you can see that roughly 275 million deadweight tons of dry bulk ships are on order, spread over the next 4 years' time. of which roughly 77% or 212 million tons is in established yards. If you were to